Hello everyone, a very good morning, good afternoon and good evening to all of my viewers from around the world. This is your host Vaibhav. In today's session of JForex Indicators Explained, we will be considering the uses properties of the indicator named Camarilla pivot points. These are pivot points which can be utilized to go with the trend as well as against the trend. So we will see how we can take advantage of this formation device to take into consideration the existing price volatility as well as the prior price movement, and using all these information we can then take informed trading decisions which will have a higher probability of ending up in profit rather than loss. So now let us head to the JForex 4 platform, which has been developed by the Dukascopy Bank SA. This is a newly released platform, and I hope you might have already used it, and if you not, the link has been provided in the bio, so do check it out. You will find the pivot point indicators listed among the overlap studies. In the last two sessions I had talked about the Fibonacci pivot, and prior to that we had also discussed the classical pivot point setup. Now this time around we will consider the Camarilla pivot. This is a slightly modified version of the classic pivot point. We get the same central point, but the support and resistance levels are markedly different. And for that we will have to first plot the indicator. So here it is, Camarilla pivot, cam pivot. Else you can simply do a quick search, and here it comes. All right, now we get this central point, and along with that we have these 5 support levels and 5 resistance levels. And if we have to divide the trend whether to consider it bearish or bullish, then the central point is the important level. But if you want to go against the trend, in that scenario you can take into consideration the support and resistance levels. And most important of the all these support and resistance levels are considered the R1, sorry, not R1, the R3 and R4 on the resistance side, and the third and fourth support, the S3 and S4 on the support side. So the classical interpretation, as you might be even aware, that we consider the price movement above the central point to be bullish, whereas the price movement below the central point is considered bearish. But if you are looking for taking some trades in the contra trend direction after having seen substantial decline or substantial rise in the current session, if you feel that the underlying instrument is finding support in the current trading session closer to the support level, then in that scenario you can take into consideration these support levels and go for long trade, as has happened in today's session. We saw the Euro USD consolidating closer to this third support, and if you had taken the trade closer to that while keeping the stop loss below the fourth support, then of course you would have been in profit, quite a lot of it. And vice versa, when the underlying instrument consolidates closer to the third resistance of the day, and we have the possibility of then shorting it while keeping the stop loss above the fourth resistance of the day. And if these key levels are breached, if the fourth support or fourth resistance levels are breached, in that consider we consider the trend to be too strong, and it is better to leave it. If you don't really want to go with the trend at those elevated levels, then it is better to simply sit on the sidelines and not go against the trend. So these are considered the key levels. This is the indicator plotted for the daily time frame. So we have this indicator in place, which is based on the prior day's price formation, the central point, and all these support and resistance levels are drawn using the prior day's high, low, and the closing price data. And we have the formula for the calculation of these support and resistance level. The central point is easily calculated by adding the high, low, and the close, and then dividing it by 3. The formula for finding the support levels and resistance levels is a bit more complex but quite easy to understand. I will not really go into the details, but it also takes into consideration the difference between the high and low, and then it multiplies it with chosen ratios. The ratios are starting from 1.1 divided by 2 to 1.1 divided by 12, and then we add the closing price to that level to arrive at these support and resistance levels. Now let us consider the editing options available to us for this indicator on the JForex 4 platform. Now here you can see that we don't really have any historical levels plotted, but if I opt for this, then we will get the Camarilla pivot points plotted for all prior days price formation, so we get a good idea of how the price has behaved with respect to these pivot point formation, whether it has respected the support levels or it has not. So we get a good idea, and in last couple of sessions we have seen that it has declined, continued to decline below even the fourth support level, and on those days it has substantially declined, and even in the next session the decline continued. In today's session only it is finding some support closer to the third support zone, and if we consider the prior price formation earlier in the week, last week, then we had these resistance levels being reached on the higher side, and on certain occasions the substantial up move continued, and it would have been a disaster if we were to continue shorting it on those elevated levels. So this indicator gives you a good idea of what price levels to target and when to simply give it up and sit on the sideline. So there is a good setup which is likely to help us in figuring out the price levels to trade on. Now I will remove these historical levels so the chart doesn't really look too cluttered. We want to highlight the central point. So for it to be prominent on the chart, we will style it up. We will increase its width also. And as I said, not all the support and resistance level carry equal weight. So we can even opt out of certain support and resistance level if you feel like, and only certain levels will be there. Okay, now we can then change its styling. Its width to make it look prominent, and you will get these levels. So we have some important levels which get now highlighted, and the chart also looks less cluttered compared to what we were getting when we had all the support and resistance levels plotted similarly. So you can do this customization and you can target certain levels. If you feel you can use other support and resistance levels also, it is always at your discretion to which parameters to use and which parameters to omit. Coming to the advanced editing options, the recalculate on new candle only is going to work for this indicator anyways, because it will remain constant for throughout the day as it is based on the prior day's formation, so it will not be changing its values during the current trading session. If you want the calculate time period to be highlighted, then you have to opt for this. If you want the calculation to be done from the custom data, then you can specify the instrument or you can simply use it from the chart. The candle period can also be varied. You can make it anything from 1 minute to 1 month. Usually I use weekly. So weekly, when we get this, it will look a bit different and it will remain in place for whole of the week. It is yet to be plotted. We just have to wait for a couple of more seconds. Okay, the levels have appeared, and these are weekly levels for the Camarilla pivot points. These support and resistance level, and these will remain in place for whole of the week. The plotting has been done while taking into consideration the prior week's pricing data. The high, low, and the closing value of the prior week gets used when we use these indicator on the weekly time frame. The time zone can be used from the chart, or you can specify the time zone from your area. On shorter periods, the values can be displayed at the period end, the period start, or period middle, or each new candle. All that can be done. The spread side can be ask or bid, or you can simply leave it to the chart, and whatever is the spread side on the chart, it will be automatically picked up by the calculation indicator. The indicator can be shown on all the periods, but if you don't want it on all the candle periods, then you can opt out of this and you can specify on particular time frames these indicators should be plotted. Suppose if you are using two different time frame indicators, the same indicator, suppose for example Camarilla pivot point is also used for the daily time frame and the weekly time frame, then you can opt for the weekly to be shown on 4 hourly time frame, whereas daily to be shown on the hourly time frame. So that can also be done, and you will be able to read more into the price formation using these variable formations and the variable specifications of the time provided for the indicator. So it makes the indicator much more helpful for carrying out the customization and using this indicator. Then you can read into the market what is happening, what the trend is. So that's it from my side for explaining these indicator. If you have any query or any idea to share regarding the indicators uses, or if you have any question which requires more explanation for this indicator, then you can write back to me in the feedback section, and I will be more than happy to take the discussion forward. For further coverage of the market, do check out the Dukascopy Analytics page. We are also available on the Facebook. You can reach out to us there. As I said earlier also, the link for the JForex 4 platform has also been provided in the bio. So do check it out. And I will be back tomorrow with a new setup, new indicator where we will consider its uses and customizations options provided to us so that we can make informed trading decisions. So thank you all for joining in. I will be back tomorrow. Till then, have a fabulous time ahead. Make a lot of money. See you tomorrow. Goodbye.